It's been a while since I've done a video, so I thought I'd just pop my head back in and say hi with this message. As I begin to get a more contextual, deeper understanding of what this game is about, I just wanted to share some, not so much light bulb moments, but appreciation for some stuff that I've known for a while, but perhaps not given the full weight to. So here we go. So how do we trade for a living? Everyone's talking about methods and expectancy and all that kind of jazz. But what I think it boils down to is a few key ingredients that if you lean on in increasing and lowering various respective ingredients, you'll be able to more successfully increase your chances of being able to trade for a living. So what do I mean by all this? Number one, lower performance expectations. I'm on about, I can't remember exactly what it is now, but it's like $8, $10 per trade. And a lot of people say that's not enough and it's too fragile and all kinds of stuff with regards to performance, but I really don't care at all how long it takes me, as long as I get there, because I know that any edge that's sustainable can be ramped up and used to do whatever you need to do in life. So that's the first thing, lower performance expectations. It also takes off the anxiety. That is a good segue into point two, increase self-management expectations. People are always trying to improve performance in terms of expectancy whilst ignoring things they're doing in their life, such as me going to bed at 4 in the morning, thinking that they can trade successfully whilst being sleep deprived and lacking of nutrition and exercise. So all components of self-management will make you better able to execute your plan and not need to sabotage yourself, because if you try to increase your performance without working on your self-management, that's going to deteriorate in the sense that if you're unable to perform, you're going to want to push too hard, and that can lead to personal problems in your life. So then point three, lower risk per trade as much as possible. This is a big one, and one that unfortunately, even though I am working my way through Top Step Trader, they don't encourage a good risk profile. And let me explain what I mean by that. Let's say you're doing the 30K account. You have 1.5K of drawdown. Okay. Now, if we're following the oft mentioned risk level of 1% per trade, and quite frankly, I believe that's still too high. If you can get it, a lot of successful traders, or the few successful traders that I've rubbed shoulders with and spoken to and been to their homes and stuff, they have one lady risks 0.25. I think it's 0.25 or 0.125 actually percent per trade, meaning she can lose 8 times and still only lose 1% of her account. So let's just say we go with the more acceptable, achievable 1% per trade. Okay, so we want to risk 1% per trade. What does that mean with a 1.5K account? If we move the decimal place over by 1, we got 0.15, so that's $150. One more time, we need to be risking $15 per trade. Now, anyone who's traded futures for more than a few seconds will know that that's impossible. On stocks, it may be doable just about, but commissions would kill you. But on, for example, the YM is $5 per tick, and plus you got commissions. So you would need to be risking, you would need to $5 per tick for the YM. You'd need to be risking 2 ticks to stick to that risk parameter in terms of 1% per trade, which is ridiculous. So, and then if you're trading crude, you would need to literally risk 1 tick. So everyone that's trading a combine is blowing the risk to reward model out of the water, and they're not giving themselves the best chance of success. So that's lower the risk as much as possible. 4, leverage the edge with more size and money. This is where top step trader do step up to the plate, because as you make more money, they give you more buying power, but that's really no good unless you build up enough cushion to lower your risk, as per point 3. And then finally we have point 5, and this is an interesting one which I've seen a few traders utilize, Cameron Foos and Ivan, I can't pronounce his second name, but from Trade Composure, I believe is his website. And these traders, they travel around and they use geo arbitrage. What does that mean? Earning in dollars and spending in baht or lira, or whatever the case may be. Lira's gone now, but spending in an economy where your dollar goes 3, 4, 5, sometimes 10 times the distance that it would go in other cities. So a big one that comes to mind for me is San Francisco. Is notorious for being very expensive in terms of rent. If you're making $800 every month with one contract in San Francisco, it's not going to go very far at all. If you move to Thailand and you make $800 per month, you can sustain your whole family of 4, just about. Certainly a single guy or girl can support themselves easily on $500 to $800 per month in Thailand and live like a king or queen in terms of eating whatever they want, getting gym membership, and well, not live like a king or queen, but live a nice comfortable life for $500, $500 to $800 per month. So that's geo arbitrage, and you can do this in conjunction with, or instead of, lowering your living expenses. So that can just mean selling your car, downsizing to a smaller house, moving to a different area, and that kind of thing. So when you combine these factors together, it really makes for a powerful. Looking for just a method is really such narrow thinking. You got to think broad and wide in the sense of lowering that expectation, because this is the zero line. We have the zero line here of performance. That's a bit chunky. Let's do it again. If this is break even, we don't need to stay up here per contract to succeed. If under here you're negative, this is 0, and under here you can't do anything with this. You can't go anywhere if you're under here. But a lot of people think they need to get up here and stay up here. You don't. You just need to get a fraction above the 0 line and stay there. Now granted, if you can get up here and stay up here, then you'll get further faster, but it's just not sustainable. Life just won't allow you to stay up there, for your expectancy to stay up there. So if you can aim for even a 0.05 expectancy over a large enough sample size, and you can just float above the 0 line, well, now you can look to, and this is in conjunction with, that will only happen in conjunction with 2. But now you can look at leveraging that edge with more size, and at the same time lowering your risk per trade as much as possible by getting more money, however you can do that, whether that's saving up or more than likely going to some kind of institution such as Top Step Trader. And then once you do that, you can move to an area where your ramped up edge just above break-even edge that you've ramped up gets you even further because of your living expenses being lowered in general, and the geo arbitrage, earning in dollars and spending in baht. So that's what I've been thinking about since I've been away this little bit of time. I've also obviously been trading and doing my thing. I have been getting into bed. I've gone from going to bed at 4 in the morning to going to bed every night before midnight, save weekends whereby it will be like 1 o'clock, 1:30 the latest. And 1 or 2 nights I did go over and I ended up going to bed like 1:30. But a massive shift for me, and it's made a big difference in my performance and stress levels, quite frankly, more than the performance. And yeah, that's it really. So here's what my curve looks like at the moment. This has been updated as of today's trading. So heading back to the highs again, been shopping around. it looks, in terms of technical analysis on my own equity curve, it's looking pretty okay, because we've broken out of a bull flag, and you've got higher highs and higher lows. So that's all good. Just waiting to pass, whether that will be tomorrow, next week, or the week after, pass this high, and then on our way to the target. It does take patience, but this can go somewhere if you can first control the risk. A few people, 3 people now, have told me that my risk control is good. I've spoken to John Hoagland, a trader friend of mine online, and also Kai, I can't remember his second name, but of Order Flow Analytics. He said my risk control is impressive, and I just probably need to run my winners longer. I had to disagree with him because, for example, today I made 3.8R on one trade, and that's habitual for me. So yeah, I don't see how. Of course, you can do better than that, but I wouldn't say that's a small reward to risk, but I digress. So that's it for now. Just throw this video out there with none of the jazz, and then I'll be back whenever I see fit. Take care and good trading to you all. Bye for now.